morning to everyone who is joining us this morning. I am live today and I've hijacked the digital digest from Ryan. For those of you that join us live or actually tune in afterwards, you'll know that this is very much a Ryan and John thing, but I have hijacked it because I wanted to talk to Conrad Ford, who is a dear friend. And for those of you who have not had the pleasure of meeting Conrad Ford, I'm going to start with my intro of him for a moment. What's interesting about Conrad is that Conrad was a founder of Funding Options which exited to Tide, as many accountants will know, a couple of years back. He's also done a few stints at different banks across his career history. So there's UBS, there's Barclays, Starling as well featured, Coconut. I think you did some work with Coconut at some point, and now is at Alika Bank as Chief Strategy Officer, running the show on so many of the directions of travel that you've taken over the last few years, and has had a personal journey working on delivering, I guess, a number of different products in the banking space to accountants. And also I think that, that's the corporate bit over. Conrad is also a lot of fun to talk to. He's one of those polymaths that can just about talk on every single subject. And we are genuinely recruiting at some point for our Indian retirement village, which, I kid you not, is very close to my heart, even closer to Conrad's, because he spent how long did you spend traveling across India, Conrad?
I spent over a year traveling around India, so yeah.
I mean, come on. So it's inevitable.
I believe we compromised on south of France, actually. So, but we need to revisit that one. By the way, I must be the only polymath in history who doesn't know the word polymath. There we go.
Oh,
I had to work it out from what you said.
Oh my God. Well, anyway, there is one fact that I did actually miss. A couple of facts about Alika Bank in particular, which is super interesting. Is Alika Bank is the fastest growing business of all time? No, fastest growing business of the year.
We're the fastest growing company in the UK.
Fastest growing company
at the moment, but we're the fastest growing fintech ever in the UK. So the UK has obviously produced some stellar fintechs and very famous names, but actually in revenue terms, we're the fastest growing so far.
Precisely that. So I think it's great to have you on the Digital Digest. And I know that for many of our listeners that tune into the podcast, we cover Alika Bank quite frequently, primarily because you've made such an impact in the accounting tech space. And I think before we kind of get started, I guess that one of the questions I always think is really important is that we should get to know the who behind you. So it would be great to hear about, what brought you to this place of building products like this, or working in a bank of this nature, and very much targeted in the accounting space as well, because your background has kind of circled a lot of these the accounting tech fintechs, but now is really bang smack in the middle of bringing accountants on board to a new type of banking. So it'd be interesting to hear your experience of what's brought you to this point, and also as a founder, how those have contributed to where you are right now.
Yeah, look, I have a fairly interesting and meandering career. So what I wasn't was the kind of person doing job interviews in the third year of university. I kind of stumbled out of university without a plan, other than the fact I wanted to see the world. Hence the fact that I have spent more than a year traveling around India in my life. So actually, I didn't get my first permanent job until I was about 26, believe it or not. And I got sat down by a fierce auntie who told me I was wasting my life and I needed to get a qualification. And the only way I could maintain my standard of living, believe it or not, was to become an accountant with an investment bank. So I am actually a qualified accountant. I'm a senior accountant, although I do little accountancy these days. And I don't think I was the best accountant in the world when I did it. But I was working in investment banking for a few years. So that's the kind of Wolf of Wall Street type of banking. And then I made probably my first good career move, which is I joined the corporate strategy team of Barclays. So this is the kind of team that support the board and executive in making the really big decisions, which countries to go, who to buy. Very interesting kind of, that was the kind of first job I had where I kind of felt I was doing something that I was perhaps not necessarily born to do, but good at. And then I actually accidentally stumbled into the SME segment. And I say accidentally because I just found a little division at Barclays when I was trying to get out of strategy where I could go and run something. and they happened to be focused on the SME segments, but it wasn't a conscious decision. And as I'm sure will resonate with lots of accountants, SME for the big banks is seen as a bit of a backwater, unloved. Yeah. If that wasn't the case, then Alaka wouldn't be the success we are, despite what they tell you in the papers. So yeah, I got a bit of a taste of freedom working into a little bit of Barclays, and that did it for me, which is I kind of decided I didn't want to stay in big organizations. I liked autonomy, I liked building things. And then I had what I call my midlife crisis. I just started to start a business. So I started a business, Funding Options. So for those that don't know Funding Options, hopefully most of you do, but it's in the same space as Capitalise, who are very active in the accountancy segment. So it's helping small businesses to find finance. It's Europe's leading player in that space, remains Europe's leading player. And now, as you mentioned, it is now owned by Tide, who everyone knows. But yeah, so what did I learn at Funding Options? This is crucial. I set out to build money supermarket for business lending. That was literally the tagline in my business case when I went to raise money. In other words, I wanted to build a fully digital way of another comparison site for small business lending. And actually what I discovered in the first 2 or 3 years is I understood far less about business finance than I thought I did. And actually that the core of business finance wasn't ready to digitalize. So Funding Options can and indeed does do kind of instantaneous funding for really tiny businesses. So a really tiny business that needs £10,000 of finance. Certainly when I left, the record for that end-to-end was about a minute. Yeah, so that's as fast as consumer now. But actually the core of SME lending is to medium-sized businesses, the established businesses, the ones that typically employ sort of 10 to 100 employees. And that's the bit that's broken. Yeah. And it's only ready to quasi-digitalize, not least because the SMEs themselves actually want to deal with a human being. So that learning for me, that actually was the key learning that made Funding Options a success in the end, that I learned that hard lesson, was when I began to understand that kind of medium-sized business segment, the 500,000 businesses that employ lots of people, dozens of people. And every town has a few of them, right? Every town, you go to a town you've not been to before, and you driving along, and you accidentally drive into an industrial estate and have to do a U-turn, and there's little, warehouses, factories. Those are our customers. They're unloved, they're hidden away, unsung, but those are vital parts of the local community, and they're increasingly underserved by the incumbent banks who are retrenching from local banking. So that was the learning, and that's why I got excited about Alaka and building a bank specifically for those businesses.
What do you mean about unloved? What types of products that they are missing out on, or what are those businesses missing out on? Because you were at Barclays, as you said, and then there was obviously a couple of years back, Barclays had, like you said, in some ways retrenched from some of those businesses. But what are you doing specifically for those M-sized businesses that's different from the other banks in the space?
So, I mean, I guess above all else, it's that we are solely focused on that segment. So that means we will hopefully become extremely good at it. And I think the evidence would suggest we have become extremely good at it. But the really that unloved aspect in terms of banking happened in 2 waves. The first wave was lending. So we all know about this one. It was a very public thing. After the global financial crisis, the big banks, as they kind of retrenched and focused on their own survival, not their customers, really pulled back from lending in particular to those medium-sized businesses. Now, it's a controversial topic, and you'll see lots of press statements suggesting otherwise. But it's a simple fact. This is a government statistic, by the way. Immediately after the global financial crisis, 10 years ago, the vast majority of lending to SMEs was done by the big banks, 80-90%, depending on how you measure it. Now it's 60% is done by specialists and challenger banks. In other words, the big banks have massively retrenched from lending to those SMEs. And it's specialists and challenger banks like Alaka. We're not the only one. There's probably a dozen of us to fill that gap. So, I mean, the key takeaway for an accountant is it is simply the dominant force in SME lending now statistically is challenger banks. You must understand that segment if you want your customers to get finance. So wave 1 was lending, and that's a very well-known one, much talked about and very controversial topic. The second wave, which is much more recent, and actually this is the #1 pain point for accountants right now, is that then the big banks have begun to actually shut down the current accounts. So, a business, generally speaking, can get by without lending, borrowing. They may not grow as fast and they may have a difficult time, but they can, generally speaking, get by an established business. But you shut down your business current account, different story. So, the famous word that came about in 2023 and entered the Oxford English Dictionary of debanked because of the Nigel Farage scandal, actually 140,000 SMEs have been debanked by the big banks. So actually the SMEs are the epicenter of that. Now the question is why? The reason for that is quite simple. Doing KYC, as accountants will well understand, anti-money laundering, is extremely difficult on our customer segment. And the big banks just decided it wasn't worth the bother. So they're very happy to do extreme levels of KYC on a big corporate because it's extremely valuable. And doing KYC on a micro business, a sole trader, a plumber, for example, is simple. You're just doing personal KYC, which is straight through and digital. The middle ground, understanding as accountants will know this, who's behind the business? Is there another company that owns the business or a share? Or is there an overseas director? Is there an overseas shareholder? Doing KYC on medium-sized businesses is very hard. And they just decided it wasn't worth the bother, which is why we've seen that shutting down.
Is that something that then Alika do themselves? Because I've seen a huge surge of AML, KYC, KYB businesses that have come in within the last 1 to 2 years that are offering this as a service. And again, it's something that there's not a huge amount of them that are doing it super well. And this is only coming at it from the banking as a service, banking programs space, that we've only really known 1 or 2 vendors that are doing a very good job of it globally. But it's it tends to be inconsistent. So how are Alika broaching it differently? And then also the other question I'd have is, where does AI, I guess, fit into some of the types of ways of working that Alika are doing? Because I'm guessing that there is some feature of that in your roadmap to help speed up the operational processing on some level, given that you're a much more new age bank.
Yeah, I mean, look, no one's ever going to do it entirely on their own because you have to work with external data partners. You work with credit reference agencies, for example. But the question is then whether you build your own tooling around those external data sources or use an off-the-shelf solution. There are some good off-the-shelf solutions, but only those that are optimized for this segment. That's the crucial thing. So let me just bring that to life. In banking, as in many other industries, the holy grail is kind of what they call straight-through processing. They want everything to go purely digital without touching the sites. And that does work for consumers in terms of onboarding. An ordinary person like me who's lived in the UK for decades in salaried employment is an instant credit check. If you can't do that digitally, there's something deeply wrong with your organization. Our customers, there is no straight through. And actually those financial services provider that try to do things straight through end up getting enormous fines from the regulators because in the end, they boast about having no friction in their onboarding. If there's no friction, there's something going wrong. Yeah, because there is no happy path. So you have to accept the fact that there are going to be follow-up questions, more documents required, etc. So only when you've asked the first set of questions, you know the second set of questions. Okay, we need to know more about this person or this shareholder. Okay. So how have we solved that? Firstly, we built our own platform, by the way, to answer your question, that's flexible for the fact that we're going to need to go through loops again, ask more questions. But above all else, it's a concierge service. So we have a human being who's getting you over the line. So they, of course, need to provide documents, but a human being, human plus digital is our model, which, of course, is the modern accounting model as well. So that's how we've solved it. And in the end, right, it's always going to take a bit of time and be a bit painful to do anti-money laundering, but it's never an excuse that the big banks take weeks or sometimes months. So we will typically, depending on obviously the questions need to be asked, it's typically a matter of a few days. But above all else, it's because we haven't tried to make something go straight through that can't go straight through. We've built people into the process, and very nice people as well. Sorry, you asked me about AI as well. Would you like me to talk about that too?
Yeah, I like happy to as well. I think, and actually, it doesn't need to be focused so much on AML specifically, but broadly, I guess that's the buzzword of the industry, and most of the things that we hear in fintech, challenger banks, neobanks, they are by nature they've focused on ease of onboarding, as you've said, in terms of getting accounts set up quicker. But now with the advent of AI, there are parts of that maybe impact the roadmap for whether it's the types of products that you offer or the types of friction that perhaps can be on the servicing side. It'd just be interesting to hear from you in terms of how that fits into your overall strategy and in particular, because like you said, you're one of the fastest growing fintechs of all time in the UK, and a very fast growing company within the UK in general. You from like 1, 2 employees to however many you're at now, which is
about 700.
700. So in my, it starts to become something that, do you start looking at AI in a way that you have a build, buy or partner strategy, or what's your take on that?
Yeah, so look, I mean, my starting point would be the world, particularly the professional world, particularly LinkedIn, is awash with charlatans, right? So the same people writing these gushing articles about how you need to reinvent your business around AI, they were saying the same thing about metaverse 3 years ago, right? And where that one ended up. So, so let's be really clear. I'm not going to give you that gushing answer. That is the most unuseful thing, and really you should just ignore the noise. Those people need to get proper jobs. But with that caveat, right, I give you that caveat because I want people to actually take seriously. I do think there's a use case in our world, yeah, and I mean us and accountants. So what you absolutely shouldn't be doing at this point in time is basically letting the Terminator take over, yeah. Even if that was technically possible, and bluntly it's not, right? The AI models are nowhere near sophisticated enough for that. But actually, what it is, generative AI, which is now a few years old, what it is actually quite potent at is productivity gains. And specifically in our world, PDFs. Yeah. So the so let's think about the world of SME banking or SME accounting. 10 years ago, it was quite common for us to be doing wet signatures, signing on in ink, and sending letters and faxes. Okay, because our world is awash with paperwork. Let's just be blunt, it is, right? Proposal documents, for example, in the case of accountants, engagement letters. We have, in our world of SME, largely moved from that onto PDFs, and COVID helped, by the way. You know, a lot of us had held back from e-signature, but COVID meant you had to adopt it. So we did digitalize in SME banking and accounting, but we didn't properly digitalize. We digitalized onto PDFs. We took pieces of paper and we made them electronic pieces of paper. That's different to real digitalization, which is APIs. Those PDFs are still administratively painful, but just not as painful as doing it with physical paper. So, for example, if we are financing commercial property, someone's warehouse or factory or shop, which we're very good at, by the way, we win all the awards in that, believe it or not. We're going to get a valuer's report, for example, or a surveyor's report, and it's going to be dozens of pages. And actually, in a case that's fairly simple to understand, we probably only really care about 2 data points: the valuation and the EPC rating, energy rating.
Yeah.
Well, PDF can automate that for you. So AI can automate that for you. Go find me those data points, and it can do it pretty accurately. And actually, with the right training, can outperform humans. So I actually think that the opportunity and prize at this point in time is that kind of like small productivity gains, particularly focused around the stuff you're doing on PDFs. Can you drive some automation there, and actually also make your colleagues a bit happier by not having to do boring work? So that's my view. We see this as something that's very exciting, but at the fringes of driving a better service, better speed, and better productivity, rather than reinventing our business around it at this point in time.
That's super interesting, and again, very valid, because the types of products that you're offering, predominantly, like you said, you started in lending and coming at it from a lending perspective beyond just the service of a current account, but in lending in particular, the number of, I guess, different data points that are relevant to a particular product. And now with Alika, as you said, when you and I first started speaking, we were talking about your speeding up of the process for commercial property loans. And I think that when you first started in that space, the average time to get a proposal or an offer for a commercial property loan, I think you said it was in the region of like 2 months or something. Am I making that?
Yeah, so the big high street banks, obviously I'm being very general here, but generally speaking, they count this in weeks. So 6 to 8 weeks, for example, would be not abnormal from applying for a commercial mortgage on to buy a warehouse or factory or whatever, to you getting the offer. Yeah, let's be clear, not the money, the offer. Yeah. Now, if you think about that, if it was a residential mortgage, right, how long is a player going to survive in the market if that's the service level they provide? And bear in mind, right, very often you get a situation, for example, where you get a business where they lease their premises, and the owner says, look, I'm going to put it on the market, but give you a chance to buy it first, right? You really need speed. There is no excuse for that timeline, none. Yeah. So our typical turnaround or SLA is 1 to 2 days, 1 to 2 working days. That's from first contact to an offer, a firm offer. Because that, it does take some time. We have human underwriters, for example. We do need quite a lot of information, but that is the turnaround. There's really no excuse for not doing it that quickly. Interestingly, from a fintech perspective, we now can do instant decision in principle. And that's not a letter saying we're offering you, but that's in principle we would do this. We can do that instantaneously, which I think is a market first. So, but above all else, that kind of speed and service is a particular focus for us in what is a very broken market. Commercial property lending is dire actually in terms of service levels.
And I saw more recently there's an expansion beyond commercial property, expansion being into buy-to-let. And can you tell me more about that in terms of where the strategy or where that comes from? Because obviously my experience of buy-to-let and what you were saying about the M in mid-size, I don't want to miss that. Is that a mismatch there in my mind? Buy-to-let.
Yeah, no, it's a very good question. So there's really two fundamentally different segments of buy-to-let. So one segment is ordinary people, typically fairly affluent, who happen to have an additional property. Yeah. So that is still typically the domain of big banks. It's a fairly conventional mortgage. You're looking at someone's affordability and you're looking at things like loan to value and simple stuff the big banks still do well. Our buy-to-let is what we call professional buy-to-let or specialist buy-to-let. It's businesses that happen to be property businesses. So just for that in context, this is not relevant to buy-to-let, but half of all commercial premises used by SMEs is leased. So there's a very substantial segment of property companies that own properties that they lease. Buy-to-let is no different. There's lots of companies or businesses whose business focus is leasing residential property. So it's not, I happen to own a flat. This is a portfolio. And it's things like HMOs, housing multiple occupation. There's another one, multi-use something. Well, as you can tell, it's not my special subject. But these are businesses that happen to be property businesses. Yeah. So it's not really, it's an extension to serving better property segments. And a related point, we find a lot of our customers who are entrepreneurial business owners, they will quite often have a portfolio of properties or on the side as well. So actually they've been asking, can you help me with this too? So there's an element of kind of demand driven, but this is the business side of buy-to-let rather than happen to own a property. You're an entrepreneurial person, I'm sure you own half of Mayfair, right? So that's the distinction.
Me personally, no, I'm waiting for our India excavation and expansion to India. So when you're ready there, then that's for the future. But speaking more broadly, again, actually, that allows me to ask you, obviously, the products that you're talking about, they're primarily domestic, and Alaka Bank is a UK bank. So where is the appetite, or what's the sort of plan looking like for expanding beyond the UK? Where does that feature?
Yeah, I mean, I think it's fair to say we're beginning to think about it. I think is probably a good summary of where we are. And when I say we, me specifically, very actively. But do we have firm plans for international? No. What I'm confident about is that if were we to go international, we would be doing the same thing. In other words, find markets with the same problem to solve, which is that SMEs or mid-sized SMEs don't get very well treated by banks. So what we won't do is something unexpected. But we are thinking about international expansion. But as an organisation, we're a very thoughtful company. One of the things I'd kind of note, if you went back through our annual reports, you'd kind of see a lot of consistency. Some other quite frothy fintechs actually, but well-known fintechs, they're kind of like, okay, this year we're doing all this, and this year we're doing this. You would not find that with Alaka. We really from day one. There's one chart, for example, that describes our competitive strategy. I wrote that on my lap in a holiday cottage in Wales before I joined Alaka. And that is still in the annual report, and I suspect it's going to be the annual report for quite a long time. So we are quite thoughtful and measured in how we make decisions. But yeah, we're actively thinking about international, but nothing firm at the moment.
Interesting. And then there's a part of me that itches a little bit on the types of other, and you've touched around some of the other products, for instance, that they fit with mid-size SMEs. Your background as well, working with Validus and uh, sitting on the board of Trade Ledger, and you and I have spoken in particular about some of the things to do with SME lending in general, and more broadly talking about the types of ways that you can underwrite quicker. I'm quite curious because some of the things that you've spoken about, as you said, that they target businesses that are perhaps where banks are maybe like retrenching on lending altogether typically. How does that fit with moving more into giving your sort of digital stance to shorter term lending or mid-term lending, as opposed to what sounds like very long-term lending?
Yeah, it's a really good question. So just understanding how we thought about lending at the start. So SME lending is very misunderstood. So there's about £250 billion of SME lending in the UK, current lending out there. 2/3 of that is secured on commercial property, factories, warehouses, etc. But that's been very unloved by fintech. But we started with that because that's the big problem to solve. And actually, that's not around instantaneous anything. It's not around open banking or anything really cool. It's around productivity. So the reason the big banks have stopped doing it is because they're so inefficient, the costs don't work. Yeah, and also getting basic service levels right. So as I said, there's no excuse for taking 6 to 8 weeks to make a decision. You can do it in 1 or 2. We've shown that to be true. It's around what actually makes a really successful accounting firm. It's about doing what you said you're going to do, yeah, and being reliable. And we've become very successful and very popular in the industry for that reason. So commercial finance brokers, which we're not sure most accountants know, they voted us year after year from our very first year number 1 in that market, and they know what they're talking about. Second biggest lending asset class is assets, equipment like machinery, trucks, vehicles. When you include those, you're in 80% of all lending to SMEs. The reason I'm saying that is because that tells us that more than 80% of lending to SMEs is secured on physical, tangible assets, things you can touch or drive. Yeah. So we started from the big opportunity, and that's one of the reasons we've been so successful, is because we've currently done about £3 billion of lending, a little over, but that's 3 billion out of 250 billion. We're just getting started. Yeah. But to be able to go for the big prize, you have to go for the big asset classes. What you're alluding to is working capital. And interestingly, in volume terms, half of all lending is working capital. So although in total value, it's not as big, it is very important, as we all know. I'm very excited about that area. We are doing some stuff in that area. What I've always wanted to do now for over a decade, actually, and almost the business I built instead of funding options, is to reinvent the overdraft. So if you reinvent the overdraft around new data sources, you can give the levels of availability and certainty that you used to get in an overdraft. One of the untold stories of the global financial crisis is the capital regulations that were brought in after the global financial crisis to make banks safer, understandably. They killed off SME overdrafts. There was a long period where SME overdrafts were falling by £5 million a day in the UK. It was like this huge vacuum just sucking working capital out of the SME lending market. So if you're a hotel, for example, the bank would wait until September, when your cash balances were nice and healthy after the summer trading, send you a letter saying we're halving your overdraft or taking it away. They were just being taken away at a huge scale. And they never came back. And the only way to solve that is to use technology to reinvent the overdraft. And that's something that a really interesting problem statement we have. We have a small team working on that. Expect exciting things. So yeah, it's the reason we haven't got to that first is because it wasn't the biggest prize, but it's very much on the agenda. And personally, it's an itch I wanted to scratch for over 10 years. I'm getting to scratch it now, which is exciting.
I know, because that takes you straight back to what you were trying to get to, I guess, in the funding options and being able to surface all different types of lending, whether it be long, mid, or short term. So that's really exciting to hear. And hopefully you give me the first scoop on that. Come on. You need to make sure that I hear about it first, because you know that I love hearing about these types of products. And actually, I think that Alika is very unique in the banking sphere, because as you said, that so many banks have retrenched from this type of lending. or from this type of business, and they feel very unloved. So I'm going to thank you for joining us. And I know that you and I have both, we could wax lyrical for much longer than this, but I was always told to leave people wanting more. So we're going to come back at another time for sure, Conrad, to talk branding, to talk personal branding, because, you know, we both have a stance on that. And maybe some other things that are around the Alaka sphere or lending sphere, because for those of you who don't already follow or know Conrad, I follow him routinely, and he is always on the speaker route somewhere and talking about the latest and greatest in terms of Alaka and also in SME banking. So thanks for joining us, Conrad.
It's been a pleasure. Thanks for having me.
Yeah, hopefully we'll make sure that we catch you again on another episode of the Digital Digest or the podcast.
Thank you.
By stopping that, I just thought I'm dead on 1:30, and I know that we're like